This week, we have two acquisitions to talk about, a Senate vote on how to handle cash without pennies, and a round of earnings to show where processing economics are actually heading. Here's what mattered this week in payments. So the first one we're going to talk about today, the Senate passes the federal cash rounding rules. So the Senate passed a Common Sense Act on Friday evening, setting a single federal standard for rounding cash transactions now that the Mint has stopped producing pennies. Tabs ending in 1, 2, 6, or 7 cents round down to the nearest nickel, and those ending in 3, 4, 8, or 9 round up, with electronic transactions excluded. An amendment from Senator Elizabeth Warren requiring the Treasury to give Congress notice and a transition plan before discontinuing any currency means the House has to vote again, though. And retail trade groups want the bill on the president's desk by September. An action item here means the merchants should confirm their POS rounding logic applies to cash tenders only and check it against the dozen-plus state rounding laws already on the books, since the federal standard will supersede all of them. Next, we have the Francisco Partners buying Moneris for $2 billion Canadian. So Francisco Partners agreed to acquire Moneris Solution from the Bank of Montreal and the Royal Bank of Canada for about $1.43 billion US. Historically, it was split evenly between the two banks and is run as a joint venture since December 2000. So Moneris serves about 325,000 points of commerce and touches about a third of all Canadian commerce transactions. So the deal carries long-term referral agreements with both the banks. Jeff Sloan, who's the former CEO of Global Payments, is coming in as chairman alongside the current CEO, James Hicks, with the deal expected to close in January. So action item, acquirers and ISOs with Canadian portfolios should expect new sponsor-owned Moneris to get a little more aggressive on pricing and bundling within a year. So you should lock in any merchant retention terms now. So the next one we have is the Visa debit antitrust case is coming down to a market definition. So discovery in the Justice Department's debit monopolization case against Visa closes on October 16th, with the final witness list due this month and a status report to the judge due August 21st. The DOJ alleges that Visa handles more than 60% of U.S. debit transactions and collects over $7 billion a year in processing fees, as we all know. And the fight now moves to expert testimony on whether ACH, Pay by Bank, and newer networks belong in the same market as debit network services. One antitrust lawyer following the case puts the odds of a pretrial settlement above 50%. So action item, acquirers and PSPs should model debit routing economics under a consent decree that loosens Visa's incentive agreements because a settlement would change routing terms faster than any pending legislation would. So keeping with Visa, both Visa and MasterCard are now backing Circle's ARC chain. So Visa and MasterCard said on August 5th, they will support ARC, Circle's new enterprise blockchain aimed at financial markets, real-time payments, and agentic commerce, with mainnet launch set for September 16th. Global Payments and MoneyGram are also participating. This is the second stablecoin consortium that both networks have joined this year after OpenUSD in June, with Stripe, Coinbase, BlackRock, and Visa CEO Ryan McInerney was explicit on the July 28th earnings call that Visa intends to stay multi-coin and multi-chain rather than to pick a winner. So the action item coming out of this, PSP should ask their processor which stablecoin rails it will actually settle on in 2027 and avoid building integrations to any single chain while the networks are still hedging. This is a big one here. Adyen adds Toast U.S. processing volume. So Adyen extended its Toast partnership into the United States now on August 10th, having already handled Toast processing in Ireland and the UK, Canada, and Australia since 2021. Toast ran more than $215 billion in gross payments across 180,000 locations in the last 12 months, ending on June 30th. Adyen framed the expansion as a path into issuing capital and business accounts inside Toast, not just card acquiring. So the action item, acquirers with restaurant portfolios should assume vertical software platforms will keep pulling processing towards a single global partner and should compete on the services that the platform does not own rather than on rate. And then keeping with the terminal thing, Clover revenue growth falls to 2%. Fiserv reported Q2 net income is down 39% to $627 million on revenue, down 4% to $5.3 billion, with Clover revenue up just 2%. Weaker hardware and data sales cut about 9 points off Clover growth, and Argentina took off another 2. And the company now guides Clover to mid-single-digit growth for the year against a long-term target of 15 to 20%. The new CEO said he will assess how Fiserv products compare to best-in-class and signaled more divestitures beyond the student loan servicing ATM and India exits already done, while activist investor Jana Partners pushes for the sale of the debit networks, as we all talked about. I think that was last week. So the action item for this, ISOs and ISVs reselling Clover should get a written roadmap and pricing commitments before signing any new renewal this fall, and should price in a second POS option for next year's plan. Probably toast. So then next, we got Shift4 cuts guidance as tax-free shopping stalls. So Shift4 reported Q2 revenue up 34% to $1.3 billion, but net income is actually down 41% to $24 million, and they lowered their second half outlook. The Iran conflict cost roughly $20 million in the quarter by cutting Middle East and Southeast Asia tourism to European and even European luxury retail, as the company expects another $25 million hit to tax-free shopping in Q3 plus $20 million in currency drag. Global Blue, acquired last year for $2.5 billion, is about 20% of Shift4's revenue, and one analyst noted that the strategic buyer could step in if that business stays pressured into 2027. Merchants and PSPs with cross-border travel exposure should stress test the Q4 volume forecast against continued tourism disruption rather than assuming a return to prior years' patterns, which means we're going to be in this for the long haul. And then one more interesting one for the last one for the day. I know this has been a little bit of a slog, but same-day ACH volume jumps 29.5%. Nacha reported same-day ACH volume is up 29.5% in Q2 to 435.7 million payments worth $1.3 trillion against total ACH network growth of 6.2% to 9.3 billion payments and 25.9 trillion. B2B volume rose 9.9% to 2.2 billion, and P2P jumped 21%. The same-day transaction limit goes to 10 million in September on the 17th, which puts most commercial payments inside the Rails reach. So the action item for this last one is merchants with significant B2B receivables or payout volume should price same-day ACH against card and instant Rails before setting the 2027 budgets, since the higher limit removes the main reason larger payments stayed on wire. So there we have it. A lot of news, not as crazy as far as like acquisitions in our space or anything like that, but a lot of like real behind the scenes things that were happening that I hope you guys maybe didn't know, and now we're aware of that. If you have any opinions or any comments about any of it, again, please put that in the comments below. And everybody, we'll see you next week right here, same time, same place. Bye.